So this is question 3 on exam 1 review, and it says, selected transactions from the Journal of Giambi Incorporated during its first month of operations in 2020 are presented here. And so it shows a journal that looks similar to what we just did, the journal entries, but it's a different journal, right? And they want us to, the instructions are post the transactions to T accounts. So what I do is I go through the list and I look at the names of the accounts and I create my T accounts. So the first account that was used is cash. So I do a T account for cash. The next one is common stock. So I do one for common stock. The next one is cash. We already have one for cash. So the next one after that is service revenue. So I do one for service revenue. The next one after that is equipment. So I do one for equipment. Next one after that is cash. We already have one for cash. Next one is notes payable. So I do one for notes payable. Next one is accounts receivable. So I do one for accounts receivable. Next one is service revenue. We already have one for that. Next one is cash. We already have one for that. And the next one is accounts receivable. We already have one for that. So now all we're going to do is we are going to post the transactions from the journal to the T accounts. So we just go in chronological order, starting from the top down. So we've got August 1, there's a debit to cash of $10,000. So I come over to cash, August 1, the left-hand side is the debit side. I'm going to debit it $10,000. The next entry is a credit to common stock for $10,000. So I would go August 1, $10,000 credit for common stock. And then I'm going to go to the next one. August 10th, there was a debit to cash for $1,700. So I would come over here, I would go August 10th, a debit to cash for $1,700. And then I see the second part of that transaction is a credit to service revenue for $1,700. So I would credit service revenue, $1,700. I then go down to the next items. We have equipment, debit, $8,200 on the 12th. So I would go August 12th, and I would debit equipment, $8,200. And then I see a credit to cash for $1,200. So I would go August 12th, and I would credit cash, $1,200. That means we paid $1,200 cash towards our equipment. And then we have a notes payable for $7,000, a credit to a notes payable for $7,000. That means that we did part of our payment in note and part of it in cash. So we are going to credit notes payable $7,000. Okay. Next entry is August 25th. There's a debit to accounts receivable for $2,500. So we would go to accounts receivable. We would go August 25th. And we would debit it $2,500. And then we see it's a credit to service revenue for $2,500. We would then go to the next entry. We see a debit to cash. The debit to cash was for $600. Oh, the date was the 31st, and the debit to cash was $600. And then we see that it was a credit to accounts receivable for $600. So now we have all of the entries in there for the journal. And then we go to question 4. Oh, no, we have to balance it first. We have to balance it. Okay, so let's balance it. So balancing it, I do the ones with fewer numbers first. So we've got $10,000 for the common stock. We've got $7,000 for the notes payable. We've got $8,200 for the equipment, and the balance is always going on the normal side. It should go on the normal side unless you made a mistake. For the service revenue, we see a credit balance of 1,700 plus 2,500, so that's 4,200. For accounts receivable, we see that we have 2,500 on the debit side and 600 on the credit side. So that means the balance is going to go on the debit side because it's the bigger side. And it is also the normal balance of the accounts receivable. So what we're going to do is we're going to take $2,500. We're going to subtract the credit side of $600. So that's going to give us a balance of $1,900. And then over here on cash, what we're going to do is we're going to add up 10,000 plus 1,700 plus 600. That gives us 12,300. And then on the credit side, we have 1,200. So the 12,300 is the bigger side. So we are going to subtract 1,200 from the 12,300. So we total up 10,000, 1,700, 600, then we minus 1,200. So that's going to give us a balance in cash of $11,100. Okay, so now we have them balanced. Now we can move on to doing problem 4, which is using the T account information from question 3, prepare a trial balance. So we're doing the trial balance is down below here. So let me move this over and go down. Okay, so make that a little smaller so we can see it. Okay, so the trial balance goes in a specific order, and I've got the order listed here. You'll want to make sure that you have the order listed. Top of this statement says the name of the company, Giambi Incorporated. It's called the trial balance, and the date is August 31st, 2020. And we do it in the order listed. So we do assets in order of liquidity. So the first asset that always comes first is cash, and it's on the debit side. So we're going to do 11,100 in the first column. The next asset would be accounts receivable. And accounts receivable, oh, I got to make that a little bigger. There we go. Accounts receivable has a debit balance of 1,900. I spelled that wrong. Hold on. Accounts receivable. There we go. All right. And let's see. Then we have equipment. That's also an asset. And that would come next in the list. And equipment has a debit balance of 8,200. Okay. So we have no more assets. So then we would go to liabilities. So what do we have for liabilities? Well, we have one liability. We have notes payable. And notes payable has a credit balance of 7,000. No more liabilities. So then we would go to stockholders' equity. So we see we have common stock of 10,000. So we do common stock, 10,000, credit. Let's see, next would be dividends, but we don't have any dividends. So after dividends would come revenues, and we do have service revenue. And service revenue is 4,200. Okay. We would then list expenses, but we don't have any expenses listed here, which in the real world doesn't usually happen. But there's no expenses in this problem, so then we would just total. So we would total the debit column and the credit column. So we have 11,000 plus 1,900 plus 8,200. So that comes to 21,200. And then for the credit column, we have 7,000 plus 10,000 plus 4,200. So that comes to 21,200. So our debit and our credit columns match. And that's what we want them to do. We want them to balance each other. The debits and credits balance one another.